Hello, everyone. So this is our topic, first part of our topic for financial markets. And today we're going to discuss about money and financial markets. And to start with, we have the terms that we need to know on this topic. The commodity money, fiat money, representative money, liquidity, and default. So first, we have to discuss the problems with barter. So the problems with barter, first, it is inefficient. And second, it is time consuming. So if you could remember, sang nag-pandemic, is nag-uso ang barter, and yes, it is really time consuming because amo na when you have to see it on Facebook, and you have to discuss on when and where are you going to see each other kag kung saan ka mo mabarter. So hindi siya yung sige dayon ma-consummate ang transaction between the two. And third is it is difficult to satisfy wants and needs consistently. Okay, so it depends on the things that you are bartering. But yes, it is difficult no, to satisfy wants and needs consistently when we have or when we do bartering. And we have the following functions of money. First, it is unit of account. So it is, yes, it is expressed in peso like that, a store of value, and it is used as medium of exchange. So take note of those three functions of money. And what are the sources of money's value? First is commodity money. It is a medium of exchange. Of exchange has intrinsic value. So it functions as currency, no? Like, for example, of commodity is gold, no? Corn. You will see more examples of it when you have your activity for this topic. Second is representative money. Medium of exchange represents a claim on an item of value, or it has little or no intrinsic value but represents something of value. So it has no value at all, but then it represents something of value. So for example of this is your coins, no? Uh, Coin itself, wala siya yung value, but then coin represents something that has value. So, pwede mo mabakal si coin because it represents something that has, pwede mo magamit uh, to buy something ang coin, and that something has value nga represent sang sadto nga coin. Okay, so that is representative money. Third is fiat or fiat money. Medium of exchange has value by government decree. So it has value only because it has been established as money by government regulation. So take note of those three sources of money's value, and you have your activity, and I will post this through PDF and in picture, and we'll send this to you in our group chat. So write 5 examples for each sources of money's value. So for 5 examples, if you will see less than 5, it's okay. You can write as much as you can. Now you can write as much examples as you can for each sources of money's value. And we have the characteristics of money. First, it is portable. You can bring it anywhere. Durable, divisible, and it is uniform. It is limited. No, it is limited. It is scarce. No? If money is unlimited, everybody will become rich, and it is acceptable as medium of exchange. So we have money aggregates. First aggregate is M1, consists of currency and coins. Currency and coins, checkable deposits. Those are checks. Checks ready for deposit, and travelers checks. Travelers checks. So those checks those checks nga gina-carry gid yan ni traveler, no? Uh, Basically, if you want to travel, business travels like that, you cannot carry a lot of cash in your pocket. So they usually bring traveler's checks. So it is easily convertible to actual money. So that includes M1. Second is M2. M2 consists of M1 and savings accounts on your bank, time deposits, money market, and mutual funds. So that includes your M2. So M2 also includes those money or wealth of yours deposited in the bank, your time deposits, investments, money market, and mutual funds. Okay, so liquidity. So what is liquidity? Ability to convert an asset to a medium of exchange without loss of value. So liquidity, you can easily convert it into cash easily, no, without losing its value. So for example, your cash equivalents, no, like that, you can easily convert that into money, but not reducing its value. So factors that affect liquidity include time constraints. So yes, time constraints, amo na pala, the more liquid, mas dasig mo siya ma-convert. So kung dugay mo siya ma-convert, due to time constraints, so it affects your liquidity. So hindi siya liquid class. Withdrawal restrictions, like your I think ang nabalaan ko lang is na maximum nga pwede mo withdraw from your ATM is 20,000. So pagka next day 20,000 naman. So ang kwarta mo kisa is not liquid as to kung mag-withdraw ka sa ATM. But then uh, kung sa ATM lang, for example, no, kung gabi or kung gusto mo mag-withdraw sang dako ang kwarta in an emergency, kwarta mo hara sa imong ATM for example, so 20,000 lang pwede mo withdraw bisan isa pa na ka milyon ang unod sa bank account mo. But then kung adlaw, of course, ang imo deposit ya is very liquid gina niya kay you can easily withdraw it from the bank, no? But then we have these withdrawal restrictions. Minimum deposits, your minimum deposits, money itself is liquid, but if you put it in a bank and of course, when you open an account, you have a minimum deposit for your savings. Savings nga passbook, you have 10,000. Well, it depends on the bank. If ATM, depende 2,000 or 3,000. Savings nga passbook, 10,000. Checking account naman niya, it's 25,000. So you cannot withdraw at to that amount, no? Kay minimum deposit mo na siya. And of course, market conditions. So when liquidity decreases, savers demand compensation or interest. So for example, sa mag-open ka current account, so mas dako ang imo nga minimum deposit which is 25,000, dira na daya when you open a current account, nagatubo na ya interest ng imo nga kwarta. Okay? So amo na siya nga savers demand compensation or interest. Kay ti hindi ko na dasig-dasig makuha nga kwarta ginpatago na da sa inyo sa bangko. So you give me interest and the bank will give you interest, and in your point of view, you have your interest income. So money is not equal to credit cards. So credit cards represent a loan. So the card or the number is simply a way to access a line of credit. On the other hand, a debit card is a way to spend checkable deposits just like a paper check. So the difference between debit card and credit card is a debit card is just like your wallet. Okay? Debit card, ra mo ginabutang ang imo kwarta. Kung mamangkot si cashier sa imo, ma'am, ng sa mga dagko na gid nga malls, mamangkot na siya if credit card or debit card. So mambal ka debit card. So it's like getting money from your wallet. When we speak of credit card, for example, may ginbakal ikaw nga TV worth 15,000, gin credit card mo, kinabakal mo siya. But then, I don't know how credit card works kay wala pa ko credit card. But I think, may nag-offer sa akon It's worth 25,000. I don't know if any of you has a credit card, so you can share. um like it's same lang siya sa ATM card class, but then credit card, it represents may ano ka. So ang value sang stuff to sa bank, it's worth 25,000 daw ang credit card. So that means I can buy buy or utang to the extent up to 25,000, no? Kay like ginbakal ko na to siya bayran siguro ni bangko ang akon ginutang, then I will be the one to pay the bank. So sa bangko ko mabayad sa akon ginpamakal through credit card. So I don't know if that's how credit card works. Oh, I don't know. Wala ko credit card class kay it's very tempting and I don't know. I see it's not good. You cannot save. So here, financial markets. So financial markets, we have the savers, we have the borrowers. So they interact through financial intermediaries, indirect finance, and financial markets, direct finance. So in the second presentation, no, second file bala ni nga ginhatag ko sa inyo. So we will tackle more about financial markets over there. No, savers, those that are called lenders. Kay bank, for example, no, bank and the depositor, there is a credit, ano ni, debtor creditor relationship. Si depositor ang nagpahulam sang kwarta, who is also a saver, no, kay gin-save ya iya kwarta gintago iya sa bangko, it's somewhat like ginpahulam mo ang kwarta mo sa bangko. Si bangko naghulam sa imo kwarta gintago iya, and then ginaruling na ni bangko class, either i-invest yan na, it will earn interest, and that interest nga gina-earn ni bank is also the interest nga ihatag ya kay saver or depositor, no, sa iya nga to the extent sang amount nga gin-deposit yaman dira sa bangko. So gina ano na class, nahimo ina sang finance manager, no, or sang bank manager. No, and they interact through financial intermediaries and financial markets. Okay? So, types of financial intermediaries, as I've said, it's bank. These are banks, savings and loans, credit unions, mutual funds. Mutual funds, I'm working with a mutual fund on my other job. It's like mutual funds, like a pool of investments. So dira tanan ginatipon ng investments, and then if there are investments nga nagtaas ang value, investments nga nagnubo, so we do accounting for that. Okay, life insurance companies and pension funds. So benefits of financial intermediaries, it reduce transaction costs by gathering and providing information, reduce risk by allowing diversification, and increase liquidity. So risks of saving or lending. First is default. No, mag-default gani ang naghulam sa imo kwarta, hindi siya kabayad. So, babay na. Well, it depends, no? May recourse pa man si lender, no, sa aton mga borrowers nga wala nagabayad. So, the saver might not be repaid either the original amount or the promised interest. With that, pwede ina ma-restructure ang ginutang, no? Either, sige, nang hindi na lang ko magsukod sa imo interest, principal na lang. No, so it depends on the agreement between the lender and the borrower. And the liquidity, so how quickly can the saver access the money? So if naghulam or may naghulam sa imo kwarta, ayhan, if you need the money immediately or during the emergency situations, mahatag ayhan dayon or mabayad ayhan dayon bisan wala pa due ang utang, like that. Or for example, you have an investment, You have an investment. So, tungod kinanglan mo ang kwarta, redeem mo imo investment. So, meaning, ginbawi mo. So, can you quickly access the money that you have invested? So, that's the risk when it comes to liquidity of saving or lending. And the inflation. Inflation, the interest rate might be less than the rate of inflation. So, the money you have today is not will not be the same with your money in the future. So we have an example, later on, we will have an example with inflation risk. So we have here the trade-off. So you know this already. Now, when the risk is high, so you expect higher returns. So the higher the risk, the higher the return. So the higher the liquidity, the lesser the return. So why was it? Um, if dasig mo siya makuha, then of course, medyo nubo ang imo nga risk, no? Kung taas imo liquidity, push mo sa makwa as cash. So that means nubo ya risk, no? Di nakuha mo dayon mo. So if nubo ya risk, nubo ya return. So that's a trade-off between liquidity and return. Kaya si risk dere is invisible, but then it is related, no? Nagapilit siya kay liquidity. And we have here the inflation risk. So inflation risk is also called purchasing power risk, is the chance that the cash flows from an investment won't be worth as much in the future because of changes in purchasing power due to inflation. So for isang una, sa elementary pa ko, okay na ko sa balon ko nga piso, busog na ko na. Subong ang piso, gakakita mo na lang sa dalan, wala, pulot. No? Sa una, ang benching ko, ginapulot, kaya hindi mo kumpleto imong piso kung wala ka benching ko. Subong benching ko, it's like, it's valueless na subong, no? Wala ka nalabot. Kung may makita ka nga benching ko, do ka, wala kang paki. No? Pero if 5 peso, pag gani, 10 pesos, lipay ka pa. No? Ayan, kung ano pagid, kung kwarta, nagid pa lang ang paper bill, kung makita mo sa dalan, baw, kalipay mo gid. Pero kung piso na subong, I doubt if puluton mo dayon. So for example, a 1 million in bonds with a 10% coupon might generate enough interest payments for a retiree to live on. But with an annual 3% inflation rate, every 1,000 produced by the portfolio will only be worth 970 dollars next year and about 940 the year after that. So the rising inflation means that the interest payments have less and less purchasing power, and the principal, when it is repaid after several years, will buy substantially less than it did when the investor first purchased the bonds. For example, to simplify this, a person, no, nag-invest siya 1 million at the age of 40 or butang ta 30. $1 million. Wow, he's rich. So nag-invest siya. Uh, so nagbakal siya bonds, no? So, pag-redeem yan eh. So, 1 million man gyapon, no? For example, the investment. Butang tano, at the age of 30, nag-invest siya 1 million. So, long term, after 10 years, abi, ang terms ng investment. So, pagka 10 years, gin-redeem ya or ginbawi ya, 1 million. So, after 10 years, your 1 million today will not be the same as 1 million after 10 years class because of inflation. So, 1 million subong is dako-dako pa. After 10 years, dako pa na siya ihan. Doon mo na abla class. So, because of inflation, ganubo ang purchasing power of money. So, that's the risk. So I think that ends our first presentation. I will make another presentation for the second topic. Okay, class. So bye-bye.